What's up everyone and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. Alright, so starting off on the 3-month time frame, folks, because we're finally getting near where this 3-month candle is going to close. You can see last month that we had this very bearish candlestick that we have not broken the low of just yet. And that is also something that we need to keep in mind, given that this is the 3-month time frame and pretty much the highest time frame that you can look at for Bitcoin, besides, if you're going to go to like a 6-month time frame or something like crazy. So if we're looking at this from a 3-month perspective, you can see we had this rise up here and we have this high that was set in April. We come down, we get this candle close down here at about 35,000. And since that point, majoritively, we've traded up since that point. But it's important to keep in mind that there's a very real possibility, given the way that this candlestick looks, that over the next 3-month time period, which is the one we're in now, we're going to need to go down and actually break below this low at 28,796. Now, if that's the case, what we need to keep in mind is we're a ways away from that right now. So if we look at our measurement tool here and we grab that and we pull it down, that's about 38% down from where we are. So we need to keep this in mind when we look at the lower time frames. What are the lower time frames telling us when it comes to trends and patterns for potential entries if we think that we're going to go down to that level? Now, I'm not saying that this one candle should dictate what we're looking at in terms of making entries and exits, but what I am saying is it's a factor, and it's a pretty big one considering the length of this body of this candle. Now, if this 3-day candle closes bullish, kind of like where it is right now, then we're not in a terrible position. But we need to keep that in mind as we move forward. This closes in 21 days roughly, so we need to look at where this candle closes. Most likely it's going to close as an inside bar, which means it didn't break the low or the high of the previous candle. And so at that point, it'll be a matter of where are we going to go thereafter. Are we going to break the high of this three-month candle or the low of this 3-month candle? So we'll take a look at that in about 20 days. On the single month time frame, we can see that we have an equilibrium pattern here shaping up with a high, low, potentially a lower high, and then we're going to come down and probably form a higher low somewhere above this 28,796 level. Now, we'll likely form a higher low because of the magnitude of the move. We've risen up about 84%. So for us to draw down, we would need to go down about 46%, which is possible, obviously, considering we just rose 84. It's possible to come down another 46 on a drawdown. But, it's entirely possible. So what we need to look at is the lower time frames, like the weekly and the 3-day and time frames like that, to give us a sense of where this might be going and if we're going to see a bounce in the coming months. But we really need to see where this monthly candle closes. Right now we have 20 days roughly left until this candle closes. So it's the same amount of time for the 3-month candle to close as well. So we'll be keeping an eye on that. If we go down to the weekly time frame, we can see that right now we have a high that we just set here this week after we came up for the last 7 to 8 weeks here. So we were due for a drawdown, so this is completely healthy for this run up. It's a matter of now, are we going to continue this rise in price in the coming weeks, or are we going to continue a drawdown from here? Either way, I think that we set a higher low at some point in the coming weeks. And the reason is because of the magnitude of this move. It's very unlikely that we go up, 81%. And then from that point, we draw down another, 46% or whatever we just looked at in the monthly time frame and just go to a new lower low. It's possible, but we need to keep in mind that it's more likely that at least we're going to come up again one more time and form a lower high before coming down and making a lower low if we are to continue downwards. So that's something that we need to keep in mind. In terms of the area where we'll potentially bounce from, there's really no established support levels besides this light blue one that we already kind of consolidated in several times and tested multiple times. So if we come back into this level, I don't know how strong this level is going to hold again. So we need to keep that in mind. From an RSI perspective, we're still very much in the clear here. We're right near the middle of this RSI at about 55. So nothing to really worry about there. This week will likely close with a red volume candle. So that will likely lead to next week either being a lower volume red candle or a pretty weak bull candle. We'll see though. We'll see. So from a 3-day perspective, the bulls did not get the candle close that they wanted out of this last 3-day candle that closed today. So this candlestick right here, you can see if we look closely, it closed below this blue level, which is this candlestick right here on the 3-day time frame. Now, why is this candlestick important? Well, if we look at this pattern in price right here, what we see is a bull pattern. So we have a low right here, so we come down, we bounce, we form a low because we broke the high of this candle right here with this wick. Then we come down again, so we have our low, we have our high because we come down and break the wick of this candle right here. So we have a low, high. Now we have our higher low because in this one candle we broke the lower wick of this and came up and broke the high. So now we have a low, high, higher low, higher high. And so now we need the 2 candle closes above the key high, which is this candlestick's high. And that's what we see right here. We have a close above here and then another close above here. So that makes this candlestick here where we had our rejection right here. So you see how the price bounces. The long lower wick is giving us an indication of that here. So we come down, we bounce, we come down again right here. You can see we trade down, we close down here, and then we bounce again here. So this area where we had our resistance should be support on a retest. But if we get a candle close, 2 candle closes right below this level immediately, this will turn into resistance for price, a very strong resistance zone for price. So that's something that we need to keep in mind. So this next 3-day candle is very critical that for the bulls, that this candle closes back inside of this blue zone or above it. If it closes below it, this will end up being a resistance zone for price that many people will likely look to go short on. So that's very notable and something that I'm going to really be keeping a close eye on in the coming days. If we look at this from a super guppy perspective on the single day time frame, we can see that we are starting to get that bounce out of these investor EMAs here. And right now, the bounce that we've had is about 11% roughly from our low that we set down here on September 7th. So now what we're looking for is this equilibrium pattern that I've been talking about. So an equilibrium pattern is ultimately where the price contracts like this. So it comes up, it forms a high, comes down, forms a low, comes up again, forms a lower high, higher low, lower high, higher low, and it just keeps doing that until eventually the price gets so tight that it's kind of like it's contracting. Like it's kind of like if you stretch out a rubber band, eventually when you let go of one side, it snaps in one direction. That's kind of like what happens with price action when the price constricts like this. So you can see that the makings of this would be something like this. We come down, we come up, we come down, we come up, we come down until eventually either we're going to break this to the upside or we're going to break this to the downside. So what we need to do is we need to keep in mind that right now we've drawn down significantly. So there is a potential shorting opportunity somewhere below, really anywhere below this 53K level, because it's very unlikely that we're going to come down, form this low, and then come up and just make a higher high going above like 23% from our low. So what's likely is we're going to come up, form a lower high, and then we're going to come down again. Now, when we come down that second time, that's where we need to keep an eye on what price does. Is price going to go for a new lower low? In which case, obviously, we'd be very bearish. Or if the price comes down and makes a higher low, we're continuing that equilibrium pattern. And what eventually we're going to wait for is either a higher high, which will look something like this. So we come down again. And once we come down and we come back up, we supersede a high and we make a higher high. So once we do that, then the momentum will be to the upside. If we get the opposite scenario to play out, where we come up and then we come down and we make a lower low, breaching a key low right here, then what's going to happen is the momentum is going to go to the downside. So that's what we need to keep an eye on the single day time frame. Real quick, if we look at the 4-hour time frame, there's not a lot going on in terms of what to kind of look at here. It's a lot of chop. It's a lot of people kind of pricing in. There's people that are traders that are looking to exit their positions because they think short term we're going to continue to go lower. And then there's also kind of the investors, like I said, on the daily time frame in that super guppy range where they're trying to kind of accumulate for a continuation of this trend to the upside. So there's a lot of people kind of messing around in this range, and it's just creating a lot of chop. So there's not really an established trend here on the 4-hour time frame. If anything, there would be a bull trend, but even so, I don't really like the way that looks. It's not very clean. So at this point, I'm just waiting on the sidelines. If we look at the pivots, what we can see is we bounced off of this S2 pivot here, right around 44.6. So that's going to be the closest support level using this indicator. And then the resistance will potentially be this S1 flipped to be resistance at about 48.3. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our global Telegram channel. You can find a link for that in the description below. It's free to join, and you can join and connect with people from over 15 different countries around the globe. And every Sunday, we do a Zoom chat where we discuss a variety of cryptocurrency-related topics. It's a lot of fun. We talk about a lot of different interesting topics that pique everyone's interest in the community, and it's really, an interesting time, to say the least, seeing everyone's questions and talking about different related topics. So if you want to join that community and start to learn more about cryptocurrencies and blockchain technologies, then check that out and join using the link in the description below. We would love to have you. And until tomorrow, onward and upward.